our assessment is that the next financial year we would have a moderate growth, and the growth would largely be driven by manufacturing and by services. And the reason being that we had seen very substantial growth, I think above 6% last financial year in the agriculture. So because of the high base, the growth in the agriculture would be subdued, but the growth in industry and services would actually result in a moderate GDP growth for the next financial year. Ideally, the way we are, Pakistan should have a much higher GDP growth than what we are expecting. What we have seen in the past, that whenever Pakistan experienced that sort of high growth rate, it actually then subsequently resulted in high balance of payment deficits and then foreign exchange crisis. While, of course, we will like to see substantial high growth for our country, it is very important that we address the structural deficiencies in our economy. And these structural deficiencies are well known to everyone. These are in terms of, for example, efficiency both in agriculture, industry. In terms of diversification of export, I believe that some diversification we are seeing. There are some segments of the economy where we feel that there is huge potential. For example, IT exports. We have seen reasonable growth this year in the IT exports. We are expecting that the IT exports would exceed 3 billion this year, and hopefully this trajectory will continue. Of course, there is some room for import substitution, but bulk of the imports in Pakistan are sort of relate to or pertain to sort of necessary exports. But 1/3 of our import is simply oil and gas. Of course, one thing that you can do is to incentivize local production of oil and gas, and that would perhaps reduce our reliance on imported oil and gas. But I believe that can only be done to a reasonable extent. We also import substantial food items. So, for example, edible oils. Some years we had to import actually wheat as well. Last year we had to import cotton because of floods. So I believe that the biggest opportunity in terms of import substitution lies in the agriculture sector. And I believe that certain initiatives are underway. I have heard of initiative, for example, olive oil production in some parts of our country. And I believe that I have been told that there is a lot of potential for sunflower production. Similarly, we can, of course, if we can improve the productivity of agriculture, we can not only substitute our imports, but actually we can also increase our exports very substantially. We have been trying to address these issues as much as we can, both on the supply side as well as on the demand side. So, for example, in terms of agriculture, we have been interacting with the provincial governments, with the local authorities to, for example, automate the land records. And in Punjab, I believe that because the land record were automated, so as a result, the banks now feel more comfortable in taking exposure against the security of land. In terms of SME, there are, of course, many issues. As you rightly pointed out, it is an undocumented sector. Information asymmetry is a serious issue. We do not have alternate scoring model, because even for alternate scoring model, you do need some information. And unfortunately, we do have that information in the economy in terms of, for example, the information that is available with the utility companies, the information that is available with the telcos, and lot of other information. We did try to aggregate that information through the introduction of private sector credit bureaus, and our mission or goal was that these credit bureaus would actually access this information and then would make this information available to the banks, on the basis of which suggested that alternate scoring model could be developed. But unfortunately, we have encountered various issues. Utility companies, the quality of data is very poor. Telcos, they don't want to share data because they feel that they can actually sell that data at some point in time. So we have not been able to overcome that challenge. But we are still working on it. We are still working with the relevant government agencies. We are very actively working with banks and Pakistan Banks Association to develop models that can overcome that information asymmetry. We have been working for a very long time now on the recovery issue as well, especially the foreclosure law. We have had some reasonable success, but again, that is an area where we can do a lot more to facilitate banks to lend to this sector. At the end of the day, as I earlier pointed out, it is actually risk adjusted return. So if we make a particular segment attractive in terms of risk adjusted return, and it could be that, for example, risk is partly absorbed by the government, that for some schemes, or we reduce the risk through reducing the information asymmetry, we would see substantial improvement in that area. So our aspiration from these digital banks is that they will be able to serve the underserved. So that was actually sort of the primary goal when we started working on this initiative. So that is the primary goal number one. The primary goal number two is the development of the ecosystem. So we believe that the digital banks would actually play that critical role. They would be more open in partnering with these institutions, with the EMIs, payment system operators, payment system providers, and other players in that ecosystem, like for example aggregators. These institutions, because they would be technologically more savvy than the conventional banks, and because they would have a structure that is more appropriate for these sort of partnerships and linkages. So we believe that they would play a very important role in developing the whole ecosystem that would help us in digitizing the economy. So we have a regulatory framework in place, but since it is an area that is still evolving, and not only in Pakistan but in other jurisdictions as well. So we are ready and we are willing to work with these digital banks to enable them to achieve those objectives. And if in order to do that, and we are sure that we will have to do that, we will need to adjust our regulatory framework. So we are working very actively with various, for example, government departments and government agencies to digitize G2P payments and P2G payments. So for example, in terms of taxation, substantial tax receipts have now been automated, and we are working with the other government agencies and departments to digitize other payments. So I believe that once we have an ecosystem whereby you do not need cash. For example, right now you and I also need cash, although of course, I mean, we are in the tax net and we don't have any problem in documentation of our transaction. But if you go and if you want to, for example, buy vegetables, you will need cash. So I believe that once that ecosystem is in place, that would address this issue to a reasonable extent. But documentation would be a key enabler. So right now we know, for example, that very well-known institutions in Pakistan, in Karachi, they do not accept credit card or debit card. They ask you to pay in cash. So I believe that until and unless we at least make sure that practice is curbed, it would remain a problem. We are very actively trying to digitize the transactions that are in our control. As I said, for example, that G2P payments, because State Bank of Pakistan being the banker's bank, we do actually sort of sit between these government departments and their customers, and we are also very actively working with other banks to increase their digital footprint. And I believe that the digital banks would also play a very critical role in that respect.